Awesome. And now we're live. How are you
Happy
doing, Luke?
days. Can't complain. Busy week, really busy week actually. So hopefully I'll get some chill out time tomorrow. No rest for the wicked, as they say.
Right. Yeah, it has been an interesting week, especially outside of our industry.
Yes,
I don't know how much we
very
want to talk
interesting.
about that right now, but yeah, I guess that's really the big news for the week, right?
Yeah, it was like the most interesting thing I saw was a meme with the guys from what's the auction show? Pawn Stars, and that one, the Las Vegas pawn shop.
Yeah,
And it's like, oh, 2020's been not a great year. We've had, earthquakes, floods, and now, Corona and all this stuff. Can we just get a bit of peace? And then obviously it's got the guy from Pawn Stars goes, the best I can do is race riots. And it was just like, oh, well, that's 2020. You can't do much about it, really. But
it's been a crazy year. It's been a crazy year.
I think it's it's not to weigh in on it politically, but I think that probably a combination of a lot of issues that the United States has been facing for a while, and then it's all been brought to a head with frustrations over obviously lockdowns and things like that. And I think that, and also it doesn't help that particularly in the United States, the demographic of the kind of people that would usually protest, which would usually be younger people, they would be the main recipients of unemployment because, they would be the most recently unemployed as well. So there'd be a fair amount of, because obviously the United States reported that most job losses have been temporary. So that would be people who work in cafes, restaurants, the kind of jobs that you work when you're just starting out or you're in college or something like that. And these would be people that would have been the most affected by lockdowns, not only from a mental point of view of being stuck at home, but also from the point of view that they no longer have that thing to do that gives them money. So I think that would be a fairly big contributing factor to the severity of it. I think that regardless, there would have been some action over what happened, but I think the severity is a lot worse because of what we're experiencing with this global pandemic.
Yeah, absolutely. So let's do a quick round of intros, Luke, for those tuning in for the first time. So, welcome.
Do you want to go first, or do you want to go first, or do you want me to go first?
Let's switch this around. Why don't you do it?
Okay. My name is Luke. I run a business called Fortifex. We do automated portfolio management. So we basically allow people to collect all their wallets and exchanges into one location for easy viewing in a very secure environment. So there's no risk to your crypto when you use our platform. So if you want to check that out, www.fortifex.com, Fortifex, Fortifex. I also have started a YouTube channel and podcast kind of thing called Blocksiders. So BlockSiders, where I interview. I cover a number of topics, but lately I've just been interviewing a bunch of guys who are sort of blockchain insiders and crypto insiders, guys who pretty much work at the coalface of the industry. So not the celebrities and not the influencers, the guys who actually are doing stuff. And then I'm also about to release a video probably tomorrow. I'll probably get it uploaded, which is going to be covering the Goldman Sachs report that we sort of covered last week, but in a much more concise sort of sub 15-minute rundown about what that report is and what it means for the crypto industry. So if you want to check that out, Blocksiders, hopefully it'll be a bit interesting for you.
Awesome. Thanks, Luke. And then, my name's Peter. So I am the founder of BlockchainSpace. So BlockchainSpace is an education hub based in the Philippines, helping people to kind of get into the blockchain and cryptocurrency world. So we've been doing kind of meetups, hackathons, industry seminars since 2018. And the aim of our game is basically to bring more people into the industry because it's just so new. Right. And for us, it's all about adoption and then navigating the ecosystem safely. So as you guys know, the prominence of cryptocurrencies in the last couple of years, and especially with Bitcoin's hype in 2017, brought a lot of scams into the space, and that's something that myself and Luke, we spent a lot of time like analyzing, like how to protect people, how to prepare them, how to educate them, and that's basically what we've been doing for ourselves, and that's why we're here to share. So welcome to our weekly, I don't know if we can call this a podcast, live stream, whatever it is, but it's a weekly crypto update together with BlockchainSpace and Fortifex. So we're here basically to give you the week's update in what's kind of most prominent in our parts of the crypto world. So myself being based in Southeast Asia, I look at very much like what's happening in the region, and then obviously look at kind of any of the big news. Usually that's always happening in the US. And then Luke himself, you wanna jump on what normally keeps you busy in the week?
Well, this week it's been mostly working on this podcast, or the YouTube channel that I started. So that's been fairly busy. And then trying to piece together a lot of the most recent, I guess, from a news perspective, what the most recent influences have been in the crypto space. Other than obviously the continual development and running of the Fortifex business, which is managing our development along as a number of partnerships we've got coming up. That's pretty much been my week. It's been fairly hectic, but I mean, thankfully, all I can say is that I live in Australia and not a lot of other countries at the moment, from a number of reasons. So we've sort of escaped the worst of the pandemic from a medical standpoint, and we've been unaffected by a lot of the other dramas that are going on around the world at the moment. So I'm pretty glad to be where I am. However, that being said, I still can't wait for this to be over so I can get overseas again. But only time will tell.
Yeah, I'm definitely with you on that. All right, so as we usually do, we usually start off the session with sharing a couple of slides. So I will, in fashion, show you a couple of slides from my side, and we usually keep it very basic, very, very lighthearted, because it is a Saturday afternoon, and we don't want to bombard you with heavy details after the heavy week. Okay, so let's have a look. Where am I? Opening it right now. Okay. So just opening the share screen right now, and if you just give it a second, it will load up. All right, Luke, I'm going to keep you there. Can you see my screen?
Yeah, you probably want to open up your slides though, because at the moment you're on the normal kind of view.
All right, here we go. All right, so I think basically what was most prominent in the last week in the Philippine setting is really more cancellations of events. And I think that's actually something that's worth kind of mentioning right now, especially in our part of the industry, is just kind of the importance of why these events are always happening, right? So in particular in blockchain and in fintech, right? So we work in a very fast moving industry where, changes in regulation or changes in, just opportunities basically move things like with ripple effects, like network effects, very quickly. And then it's very hard to kind of get that dissemination of information like across to the main stakeholders, very quickly. And so I think the importance of these events, like, all these events being postponed or canceled, doesn't help too much. But what we've seen recently is actually kind of this bounce back, where everyone is going from offline into online. And honestly, I've been amazed at the transition that online has kind of taken. So, why do we go to these events, and why in particular is it interesting for fintech? Well, it gives us great visibility, especially for, imagine like the smaller players that don't have a lot of marketing budget. You've got a lot of people with the same goals and objectives, coming into the same event. And then you've got obviously the high density of those same people coming in. Obviously, we go there to be educated. We want to learn exactly what are the latest trends, what's happening in the industry. And then we also look for mentorship, and mentorship can't be, undermined. It's just so important, especially when such a new industry. There's always going to be some people that are slightly more advanced in their knowledge, and you want to learn from them. And there's going to be people that are going through, the same things that you're going through. Then obviously these events are a point of collaboration, a point of networking. And something also not to be underestimated is actually for some, the people that do put together these events, and actually something that we've done for BlockchainSpace in the past is, you put in the effort to create these events to actually create revenue, right? And that's it's a way of like creating a win-win for the participants and also for the organizer themselves. So yeah, so as I mentioned before, we've seen this explosion of virtual events suddenly just come about, and it's been so quick, right? I don't know how many of these. I mean, I'm pretty sure most of these were not actually planned online previously, and a lot of them transitioned online. So you're looking at very industry-specific events, things like Ready Layer 1 is like crypto, blockchain, like DeFi specific conference for people that are kind of at the bleeding edge of what's happening in the blockchain space. Then you have the Ethereum Summit, which is your typical Ethereum annual summit. You've got the Sigma Summit, which is more about bringing kind of like a general audience in, like people from the gaming space, people also from the general kind of fintech space. Then most recently, you've got Masari's Mainnet conference, and I've attended about 3 out of 4 of these. So I'm just sharing these now, but they are just incredible actually. So these virtual events have been 2 to 3 day conferences. The speaker lists have been immense. Like we're talking over 100 speakers at a particular conference, and the agendas are ram-packed. So you can imagine every single day they chuck in as much content as possible, and because it's online, it's so easy to just transition, I think. So it's very easy to structure it. You can stop it very quickly and go to the next one. You just flip cameras. These events have just been for different audiences. Luke, have you had any experience with any of these conferences yet?
No. However, I haven't looked at a lot. I mean, I know that Bitcoin Malaysia did their DeFi conference last week over 5 days, which was actually quite good. Just a plug for them. But no, I haven't really had time to sit down and do conferences. However, my understanding is that this year Consensus New York is going to be an online event, obviously, and they're actually going to be allowing people to go for free. So it means that previously you would have had to have paid, $1,000 a ticket or something like that, but now you can actually attend for free. So they're the only ones that I've got really a lot of scope on. But I mean, even though we're doing similar things at the moment, I think that there's an abundance of events being run in the space. And my experience of crypto events in particular is that if you've been to one, then you pretty much see the same people at every other one as well. So the value of re-attending is sort of not really there. But I mean, yeah, I haven't really seen any of these ones in particular personally, but you can guarantee that. I mean, like I said, I was a viewer in a lot of the sessions last week with the DeFi event, mostly because I wanted to key up on all my knowledge about DeFi, and then I'll also definitely be online to attend the Consensus when that's on.
Yeah, awesome.
Which I think is in a few more months.
Yeah. So I mean, for people that are not already following these kind of conferences, that I think this is this is basically the way to catch up, right? It's like
definitely, if you're new and they're not charging you an exorbitant amount of money to go, or if they're free, I'd probably say it is the one of the last opportunities that you would get to attend one of these events without paying significant money.
Yeah, absolutely. And so on my final slide of actually talking about virtual conferences, right? What I was particularly amazed about, so this is the last conference that I went to, and is actually their toolkit now. Now, I don't know if these platforms have existed pre-COVID, but I'm pretty sure they should have, because I don't think they could have developed it that quickly. But I mean, if you have a look now at these conference tools, these online conference tools, look, you've got a reception. You've got an area where people can hang out before the actual conference starts, and you can actually start networking and chatting to people, right? Then you've got a main stage. So that's where you tune in really for the keynotes. But then at the same time, you can also be running side sessions whilst the keynote is actually running. So just like at a main conference, you've got your main stage, and then you've got side stages where you've got kind of like more kind of topic specific talks going on. Then you've got these networking areas. So just an area where you literally, I've seen in these apps now, what they do is they do kind of blind dates. So if you're open to networking, you say who you want to actually meet, then you just keep your camera on, you keep your microphone on, and then it will connect you to someone. And then it won't be your choice sometimes, right? And it will just randomly just introduce you to someone. I don't know how you feel about that, but it does encourage you basically to meet other people within the conference itself.
Yeah, it's a bit like chat roulette.
Yeah.
Or Omegle or one of those things. It's like, who knows what you're going to get?
I think this is the future. Once you go online, and you just have to be open to more experiences with random people now.
I'm pretty sure, but I mean, it's not necessarily a bad thing. I think there's going to be a lot of that going on. I think that after this is over, there's going to be a lot of people who are going to realize, and a lot of businesses realizing, that they don't need an office anymore. They don't need to be paying commercial space. Their insurance premiums in Australia anyway, for things like workers' compensation will go down because the staff aren't traveling to and from work anymore. Therefore, the liability is lower. I think there's a lot of companies that have realized that if their staff don't necessarily need to come into an office, that they don't really need to come into an office.
Yeah, absolutely. And I mean, specifically for these kind of conferences, you can imagine, like, the rental of these.
The cost saving will be huge. But I mean, I think maybe you'll see, maybe there'll be the ability for there to be less live conferences, but you'll never be able to eliminate the the value of some of those live events, because I mean, there's certain things like if you're at a live event, the level of distraction is a lot lower when you're listening, whereas if you're at home and there's stuff going on, blah blah blah. So I think there's never really going to be a situation where you're going to see the end of live events or the end of working, like working in an office or something like that. But I think that the way in which we do it will change. Now, the biggest risk, I mean, conferences aside, I think the biggest risk space at the moment is actually going to be your larger, like, co-working spaces. Like a WeWork, for example, is an incredibly risky place at the moment, particularly because they're so exposed. A smaller player, like a smaller co-working space, has the ability to be agile, and they can change certain things about their business fairly quickly. Whereas people whose entire business and have all this money invested, and they need to stress out about investors and returns and blah, 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 like WeWork, are going to have real problems to try to recover from this. It's actually going to be very, very interesting to see what happens to them, particularly because they weren't even making money in the first place. And they've got these really, really lofty valuations. So that would be a key one to look out for once all the dust settles from what we're experiencing now. But I think co-working spaces, I mean, it could go either way. There could be more demand for co-working spaces because obviously people don't need fixed offices because they might not have their staff on full time anymore. They need more flexibility. or it could be an issue where a lot of startups are just like, we don't even need a co-working space. We're just going to send our whole team from home and rent out a meeting room once a week or something. So it's going to be interesting to see how that. I think agility is what's going to be necessary to come out on top in that industry, be it both commercial real estate for offices and co-working spaces.
Yeah, so funnily enough, man, I'm actually writing my MBA paper on the flexible workspace industry right now. Surprisingly, actually, but like you said, actually, for the smaller players, they're actually seeing new opportunities too. So actually, your traditional office renters, so the occupiers of the office space, right? The ones that normally take their own office, have bigger spaces. These guys are now looking at kind of outsourcing or putting certain divisions, like as part of their business continuity plan, into kind of remote settings. So just to give them a bit of flexibility, also so that there's no one central failure point, right? So let's say the office in BGC goes down, right? Then it's not like everyone can't work anymore. If you actually have small teams like working out of different spaces, like these swing spaces, then that at least those functional teams are going to be continue running, right? So that's something that's actually kind of interesting right now, is that they see like basically traditional occupiers now starting to inquire about flexible solutions. So it's kind of like it's brought in a new audience into that space.
Yeah. And like I said, I think if you're a smaller space, you can adapt to that a lot quicker as an individual.
Yeah. And also something you mentioned earlier about these online conferences. That it probably won't overtake offline conferences in the future. And definitely, I've seen like the share of like technological problems with these conferences. So one of them I was watching for Ethereal. They just had like speakers drop in and out because of their internet connectivity.
Yeah.
These are in perfect places where internet should be fine, but you just can't guarantee that these guys are
well, depending on where you are, and like obviously a lot of the internet, different networks are different, but the load being placed on certain networks that weren't really expecting that load to exist. Because obviously, for example, Sydney CBD, whatever networks are there, they'd be underutilized at the moment, but then the suburban networks would all be running hot. And so that's an issue. But I'd probably say that I reckon that the first run of events that happens post everything opening up and everyone's allowed to travel normally internationally and all that kind of stuff, those first wave of events that are on then are going to be packed out. They're going to be absolutely ballistic. I reckon people that would just be itching just to get away will be flocking to these things. So I reckon, for example, let's say hypothetically it's like October, November, December. Yeah, anything in November is going to be jam-packed, depending on the location, obviously. But, your major Southeast Asia centers, Manila, Kuala Lumpur, Jakarta, Singapore, and especially Singapore and Kuala Lumpur, they're just going to be gangbusters. And maybe even Dubai. Dubai is another big one.
So I'm just wondering how that's going to work with social distancing. You reckon?
That's my point. Is it's when that's all said and done. There's no way they're going to allow mass international transport while there's still stringent social distancing laws. So I think that'll be what happens after this is all over. And the end of the day, like no airline is going to be really that profitable if you've got to have every second seat empty. Losing in some cases a third of your capacity on a 333 setup on a plane, losing 1/3 of capacity is pretty crippling.
Yeah.
Unless you drastically increase ticket prices, you'd really want to be filling out every flight and hoping that 2/3 full flight can still make money, but it's not ideal for an airline. So while we're still needing to practice that, it's going to be I don't think we're going to be in the clear just yet. But anyway, do you want to talk about some? We've got about 15 minutes to half an hour. So do you want to talk about some crypto news?
Let's go for it. Okay, let me switch over.
If you just want to open up my other screen there that I've got there.
Right, give me 1 second.
There we go. So I'm sure everybody is sort of, this is just the front page. I'm not going to go too much into it, but basically the main news at the moment, there's two main things I want to talk about. Number one is that at the moment we're seeing this issue, and we talked about it briefly last week, where we looked at the Goldman Sachs report, and I talk about it a bit more in the video I'm going to release tomorrow. But the biggest issue at the moment is the devaluation of the US dollar. Now, that has obviously a lot of far-reaching effects, especially in countries that are reliant on the US dollar for trade. One in particular being Nigeria, because they produce a lot of oil. And then obviously a lot of oil-producing nations and things like that. Because just remember that at the moment the standard is that crude light oil is traded against the US dollar. So as these countries sort of start to look at the US, taking in X many dollars per barrel of oil, and they're obviously not earning as much as they used to because of the fall in the price of oil, they're starting to look at alternatives as ways to start to get themselves away from it. So in this article, it basically talks about that there's been a global dollar shortage, which is creating a crisis in regards to the US, them trading against the US dollar. So what they've started to do is actually they've become that Nigeria has become the biggest contributor to the pickup of peer-to-peer Bitcoin exchanges. I actually did a video for a Chinese company they're based out of Hong Kong, which is still technically China, that do Forex investing. And I did a bit of a thing on Bitcoin for them. And the most amount of views that the video got, and I mean in the order of like tens of thousands that they got, the most amount of views were actually from Nigeria. And I thought it was some, weird bot buying scheme, but it turns out it was legit because it's actually one of the fastest growing areas. Now, there's a few reasons for that, but it is interesting to see that these, I guess, these oil reliant countries that are seeing a problem with getting US dollars, a sort of, I guess, a lack of trust in the US dollar. But however, they've still got an actual asset, and they've actually seen a lot of a rise. Now, I'm not saying that they're starting to trade in Bitcoin, but because they can't get their hands on US dollars, it's almost becoming a better means of transmitting capital than the US dollar, because they can't actually get their hands on it. So then we're also seeing that obviously in a lot of these countries, sort of the idea of stable coins is starting to open up. And this is more not really necessarily real, but it's more like hypothetical. It's not actually saying it in the article that this is actually going to be a real thing, but it's sort of saying that if you can't get your hands on real currency, then the idea of a stable coin that's backed against an actual currency, or a stable coin that's backed against gold or something like that, is a more than capable means of trade if you can't get your hands on physical US dollars, which is actually quite true. However, I'm not going to get into the problem at a banking level of that, but as a means of trade for a country that would be just needing access to money just to stay liquid, as in to promote enough liquidity so that the economy can flow. This is something that stable coins have absolutely no problem being able to do. We're also seeing, obviously, in America, obviously with all the turmoil that's going on there, that a lot, obviously, the increase in popularity in something like Bitcoin is actually increasing. Now, we did have a talk a couple of weeks ago about how, with the halving, it's opened up a lot of questions about the survivability of the network, because the idea of a block reward is not a reward; it's a subsidy. Until such a stage, until the network is sustainable purely on fees. And we talked about why that's going to be a bit of a problem in the future. But essentially, I mean, there's a lot of interest in Bitcoin at the moment in the States, yet again, as an anti-inflationary device. And as we know, the profits, if you would have held the S&P 500, gold, or Bitcoin on the 1st of January 2020, your Bitcoin would be up 40%, your S&P would be down 2% and your gold would be up 9%. And I mean, that's why when I first did the talk about, crypto and Corona and all that stuff, is that, the Bitcoin is still way too volatile to be considered a true store of value. However, I think it is moving into that hybrid role, mostly because of how easy it is to get. So this is why this article is a bit relevant, is because when US dollars are hard to get, it's still incredibly easy to get your hands on crypto, no matter where you are in the world. As long as you have an internet connection, which the majority of the world still has, and reasonable electricity, you have no problems getting your hand on Bitcoin. If you have a smartphone and an internet connection, you're pretty much done. And that doesn't mean that doesn't matter whether you're a CEO or you're working in a chip shop or something. It's like anyone can get their hands on it. And it is becoming, especially as we see this not only the pandemic, but the fallout from the pandemic, which will be more financial when we see that pan out. It's going to be really interesting to see the role that crypto can play in enabling people to keep their economies liquid as things tighten up. The other thing, and we did talk about this a few weeks ago as well, was that we've recently seen a massive increase in a massive decrease in the value of the Lebanese pound, or the Lebanese pound. And so to a point where I think when we originally talked about it, it had gone from 1,500 to 3,200. So it had literally halved, and in one day it had dropped 12%. So what that means for the person on the street in Lebanon, is in the citizen of Lebanon living there, is that in the period of a day, the cost of everything you would want to buy went up by 12% due to the devaluation of the underlying currency. So just remember that, I mean, currency is something we put faith in. It actually has no underlying value. And in this case, there was such little underlying value that it was able to drop by 12%. However, remember that the things that people are used to buying with that currency, the value of them did not change. So it meant that if you're buying a coffee for $3, it was then going to start costing you roughly about $3.42 because of the increase, because of the devaluation of your dollar in the cost of a day. I can say in Australia, if the price of coffee went up 50 cents, people would start rioting if it happened all around the city in a day. So this has actually gotten a lot worse since then. It's actually gone to 4,000 now. So it means that the total value that you're basically what you could have gone to the shops and buy and have bought, cut everything in half, and then take a little bit more off, and that's what you could have bought with the same amount of money that you had. That's how much you can buy now, whereas previously you would have been able to buy the whole basket. Terrible analogy, I know, but and essentially what we're seeing is that that now people are looking for alternative monetary policy and alternative banking sources. So this is yet again a time when people are sort of looking at what is cryptocurrency and what is Bitcoin and what can these assets do. And I'm not necessarily suggesting that they should all be banking in Bitcoin or they should move their entire currency over to Bitcoin, but a lot of these policies that have sort of taken place over the past, it's been more than a couple of years in Lebanon, which have led them to here, have been both politically based as well as in response to a number of different crises that the country's faced. But essentially, it hasn't really been managed as well as it could have. And I guess looking at a more decentralized system, something that would operate similar to how a DAO might work, is sort of what we're looking at here, where essentially you have a set out monetary policy, and then it can only be changed if there's a certain amount of consensus in regards to how it needs to be changed. But essentially, that's the big thing happening in Lebanon at the moment, which is it just shows that. I mean, I'm not saying that Lebanon is necessarily the same as, say, Australia or the Philippines or Malaysia or America, but it isn't a weak economy, or it wasn't a weak economy. They have had their problems in the past, and they haven't been made easier by a lot of things that have been going on in that part of the world over the past few years. However, it wasn't considered to be a basket case, like, for example, Greece. However, this is sort of what we're seeing here, is that, an economy that, it's basically saying that no matter where you think you're at, the people, the general citizens of Lebanon would have been hearing everything is good, everything is good, everything is good leading up to this devaluation of their dollar. And when they eventually found out that they were pretty much screwed, it was already too late. And then they've ended up here. So it means that if you had $100,000 in the bank, that is now only worth essentially, $45,000 now. Like, just imagine losing, most of your capital just like that in the space of 3 months. Your buying power has just been decimated.
So in layman terms, I mean, are these guys basically now hedging into crypto assets? I mean, are they looking for stable coins?
It's a lot of people looking at that. What the idea is that there's been a sharp rise of interest in that. I'd probably say that the amount of people that have taken action would be low, particularly because, I'd probably say even in a more developed economy, it would still be low. Like, I think that if the US dollar started to tank, the amount of buyers of Bitcoin would not go up a significant proportion. At the moment, it's estimated that 5 to 6% of Americans have Bitcoin in some way, shape, or form. I don't think that would just jump to 12% or get really crazy. I'd probably say the market penetration in Lebanon was lower. So I'm not saying that all these people are rushing to it, but this is merely saying that that there's been a lot more interest in people getting out of the Lebanese pound and moving into crypto. But it seems to also be one of the, because Bitcoin is both recognizable, it seems, and it's also the most easily used in Lebanon. So, basically they're saying that a lot of businesses and individuals are starting to get interested in using crypto as a means of trade. Because obviously, yet again, using your using your pound. Even though Bitcoin is not the most stable of currency, technically it's more stable than the Lebanese pound. And Bitcoin can go up, whereas the Lebanese pound is only going in one direction. So even if Bitcoin goes down by 10%, you've still probably outperformed the pound. And a lot of people would be looking at what's happened with them and going, well, I don't want to go through that again. In the same way that people in Venezuela, when the Bolvar was when that was tanking, people thought it would have stopped at 18,000 to the US dollar. Remember, it was at 100 and it went to 18,000 per US dollar, and then it got to 40. And most people were saying that even at 19,000, that was insane. And then it doubled again. So there's nothing really saying at this stage that, especially considering what's going on globally, that the Lebanese pound might not get to 750, 750. Sorry, 4,000, it might get to 8,000 to the dollar. Sorry, it might double again. There's nothing saying that won't happen.
Good question from the audience here. So from Jonathan, so he's actually asking about global dollar demand, and he mentioned that. Let me put it up on the screen actually, and then you can read it off there. See that?
DXY is below 97 after hovering. Global dollar demand crypto assets and pricing. Look, it's not the main beneficiary of dollar demand, of the US dollar demand, is not going to be cryptocurrency. Cryptocurrency is going to be an ancillary beneficiary. The main beneficiary is going to be gold, because not everyone in the world understands enough about cryptocurrency. Not enough people in the world. There's not that penetration there. In certain countries, in certain parts of the world, yes. Like Metro Manila is known as one of the bigger hotspots of crypto, but that's mostly due to a remittance kind of thing. So look, there are going to be certain areas that will be more savvy towards crypto, but I'd probably say the main beneficiary is going to be gold. Because people understand gold, they can physically touch it, see it, smell it. They know there's a process going on, and they know that no matter what happens, they're going to be able to do something with that gold. Short of there being a zombie apocalypse, you're always going to be able to offload gold onto somebody. In a Walking Dead situation, that's not going to be the case, but more than likely you're about to offload gold if things really hit the fan faster than you will Bitcoin. And so I think a lot of people will always move to gold first. However, those that don't have access to gold and still have the savvy to want to get out, I mean, they're the people that will go to cryptocurrency if they're a serious investor, that is. But yeah,
another question. Sorry, Jonathan has another question here. Let me just put up on the screen. But I think he's looking at what kind of sources we review for basically watching people purchasing in different countries.
I mean, you really have to go to crypto news sites to have a look at that kind of stuff. I mean, that's the main thing. Or the other thing you can have a look at is local Bitcoins data. So that's done on local Bitcoins, and you can actually see data behind what people are actually doing on that by jurisdiction. So you can actually go to Lebanon, local Bitcoins, and see what kind of volume is being traded through local Bitcoins. And obviously an increase in volume means an increase of buying and selling, which would indicate an increase in demand. But don't get too blown away by the volume. It's not in the same rate at which you would see on an exchange.
Right. I mean,
take it with a grain of salt. Like if you see $50,000 going to $100,000 or something like that, that is not, I mean, it's doubling, great. But we're not talking about anything that's going to be blowing away an economy. You know what I mean? If you saw 5 million go to 50 million, I mean, now you're talking. When you're talking at the rate of an economy, once you start seeing percentages of GDP being traded, that's both through exchange and through local Bitcoins. That's a time to start to say, wow, okay, we're starting to move in the right direction. But just be mindful when you have a look at a lot of these stats that you've got to put it in perspective about how big the economy is and how big an impact that's taking. So even if something's doubling, I mean, it means that there's more interest, yes, but is it time to get excited? Maybe not. You've really got to take a bit of. Sometimes you really have to take a step back and have a look at the big picture and see how everything's working before people get carried away. So I'm not trying to plug what I'm doing again, but I mean, I do talk about this in my Goldman Sachs review. Like if you go out and have a look at a lot of the stuff that people have put out on this Goldman Sachs report that came out on the 27th of May, people are either really angry and talking about how it's a Goldman Sachs conspiracy and they want to buy your Bitcoin and blah, 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 blah. And other people are like, oh, it's the best thing ever. We got mentioned in a weekly call, a monthly call, a client call. We got mentioned. This is great news. We got 5 slides, blah, 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 Bitcoin to the moon. And I think that sometimes people get carried away by these small things. And I think that it's important to maintain perspective when you're looking at that stuff. But if you want to learn all about that, you can have a look at the channel or you can have a look at the recording from last week, which is, similar stuff.
The question for you, right? What do you think the percentage of local Bitcoins volume is versus actual regulated exchanges is?
Where there are regulated exchanges, it's not that big. I mean, you can have a look at it. You have a look at local Bitcoins and see in different countries. So where there are set up local, I mean, I can imagine local, other than the United States, which is a unique case in itself. I mean, I would argue that local Bitcoins transactions in Australia are negligible compared to the exchanges because we've got these big regulated exchanges and everyone just does everything through them. In countries that, I'd probably say Singapore is similar. Indonesia is probably very similar. Malaysia probably is similar because they have 3 regulated exchanges. The only issue with Malaysia at the moment is those exchanges have only been able to start to onboard customers. So there was a period of about 12 months where people didn't have any other option. They either needed to do local Bitcoins or have a friend who already had an account on a Bitcoin exchange. But I'd probably say in countries that don't have regulated exchanges, that's where you're going to see trade volume. And that's the thing to look out for. When you see trade volume increase, but there's a lack of exchange, it means that there's a lack of interest. However, to be honest with you, I'm not 100% across the Lebanese cryptocurrency exchange market enough to really make a solid comment in this case. But I would always say that local Bitcoins should be significantly lower than the exchanges themselves, mostly out of a trust perspective. So if you go to an exchange, they've got all your data, you give them your money, you take the trade and you take the Bitcoins out of the exchange. If it works once, it'll work again next time. You've got to be careful about exchanges because exchanges can be dodgy as. But I mean, there's that. Whereas local Bitcoins, essentially what you're doing is you're being paired up with someone who wants to exchange Bitcoin with you for a certain price, you know, a certain amount of Bitcoin for a certain price, whatever. And depending on how you do that deal, it can sometimes, I mean, in the old days, it used to be like doing a drug deal. Like, hey, man, have you got the Bitcoins? Yeah, I got your Bitcoins. Where's the cash? All right, share with keto. It's like that kind of stuff. And I think that most people would not be necessarily willing to take that risk on meeting some stranger in a cafe and exchanging Bitcoins for cash. Most people would always default to wanting to be used at a trusted third party. However, yeah, I'd probably say that in countries where there are established exchanges, most people wouldn't be using local Bitcoins unless they're your real diehard. I'm off the grid, tinfoil hat wearing. You know, I'm off the grid. I'm off the banking system kind of human being.
Yeah, got another question for Jonathan. Thanks, Jonathan, for keeping active. So he's asking about the state of crypto assets and blockchain companies regulation in the Philippines. So I think I could probably jump in there. So I'm based here.
Please do.
And so the first thing actually you should know actually is blockchain. You can completely separate that from cryptocurrencies, right? So blockchain being just relevant for the technology side has absolutely no regulatory kind of consequence. So it's just treated as a technology. Right. Whereas cryptocurrencies are 100% regulated, right, and that's regulated by the bank, the central bank here. And so, actually, the point that's regulated is the exchange of cryptocurrencies. And so, so that's typically your brokerages, the ones that are converting, peso into Bitcoin or Bitcoin back into peso. You know, and there's about 15 licenses that have been issued already, but not all of them are active, right? So not all of them have order book exchanges. Only some of them have order book exchanges, and some have very limited kind of services. But yeah, so typically the way that it's regulated is if anyone is converting fiat into a digital currency, it must be declared, and it's regulated by the central bank here. All right. But look at, do you know what I love about what you mentioned about local Bitcoin? So I was just thinking, like, so what metrics should we be using from local Bitcoins, right? What you said about basically the markets where there are no exchanges, and then suddenly you see an increase in number of transactions. That's where you kind of you're seeing like newly built up like kind of retail interest. And so yeah. That's like super interesting, right? That's a good metric to know. Like
there's a lot of factors that go into that, and unfortunately, I mean, the kind of people that would know, essentially, for someone who doesn't travel. If you're not traveling to those places, or you don't know people who are actually there, or people in the industry, you actually are at a bit of disadvantage because you don't understand the trust metrics. Like, you know, for example, you might have a lot of license exchanges somewhere, but if nobody trusts them, then it's irrelevant. So, I mean, you've got to understand what the local market's like as well to make the calls. I mean, I could pretty much, this isn't me being generalist, but I'd say that in places like Africa or certain parts of Africa, there would not be either exchanges, and the exchanges that were there would not be trustworthy. So local Bitcoins would be the only source of information you could go off. Places like Lebanon at the moment, I'd probably say that the majority of it is the majority of your volume is always going to be there, and that's really going to be your bellwether about how much interest there is in Bitcoin at the time. Now, also, we are in a unique space at the moment where there's a bit of probably panic, and there's a bit of reactionary stuff going on where people are buying these cryptos in order to hedge. But what's really going to be interesting is to see what happens afterwards. So, I mean, we did have a lot of interest in crypto back in 2017. and we saw a fairly large jump, and there was, all this stuff happening and blah, 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 and the industry was never going anywhere. And then it all came toppling down, and then, this is where we're at now. So, I mean, I would be more interested to see what happens after all this is settled. How much of an impact the industry has made or has been able to make, because this is the real opportunity for the industry now. The opportunity is that we now have there's now a chance for the industry to offer solutions to problems that maybe weren't as easy to identify, or even that the user wasn't aware they existed. I remember, I've said this a number of times, that when you're selling something, the most common thing to understand is if the user doesn't think there's a problem, then there's no problem. And people, have been thinking that there's no problem with the existing monetary system. Whereas now people are starting to see that, yeah, there is a problem. You can't just be printing money forever, having zero interest rates and hoping that everything's going to be fine. And I think that people are starting to see that. And so this is the opportunity for the crypto space to maybe say, well, hey, look, we've got all this tech solution that can actually make a lot of these problems a lot easier, especially when it comes to international remittance, access to liquidity. Even when you're having a look at some of the DeFi solutions that are coming out, there's a lot of opportunity there. So I'd be more interested to see where the crypto industry is after these 6 months, about 6 months after this whole thing is settled, because that's when we're going to see whether an impact was made, problems are solved, and businesses have been created, or if it was just another missed opportunity. In the same way that when we talked about the co-working spaces, it's going to be interesting to see what happens to them all 6 months after this is over. Maybe people realize that they don't need a permanent office anymore, and co-working spaces are just the new thing. So I think that's more going to be the two interesting parts of it, is where we're going to be in 6 months to see which businesses capitalized on opportunities over this space, or which businesses sort of put their heads in the sand, watch Netflix for 12 months and just hope that it'll all be okay afterwards. So yeah, I would be looking, if you're interested in the space, I would be looking for and following projects that are actively trying to solve problems that the world is facing right now in the middle of this pandemic, because they're going to be the businesses that are going to be making the lasting changes. They're going to be creating users that will be habit driven to use their product. Because while there's no other alternative now for a lot of financial products at the moment, there's no alternative but to use crypto. And so these guys will have a captive audience to build a habit-based user following for the next 6 to 12 months while this thing rides out.
Are you seeing any particular services or products like coming out right now that particularly address like COVID kind of problems?
No, not specifically COVID. Obviously, we're not talking about COVID particular. Like, obviously, nothing that's medical. I'm talking about more allowing people to access money. Anything that involves, wallets, decentralized, a lot of decentralized wallets are quite handy because they allow people. So just remember that digital money and digital wallets are a thing that existed before the crypto hype. So that was basically, businesses, large businesses in Southeast Asia use a lot, like GoPay and GrabPay. Some argue that the main business model for Gojek, for example, in Indonesia, is not to provide transport and delivery services and all that kind of stuff. That's not their key business. Their key business is ownership of wallet. So what they essentially want is for people to eventually solely use GoPay for all their payments and all their food, all their driving, all their bike rides, their laundry, massage, all the different things you can get over there. You can get on Gojek, and their business model is not to provide those services and take a cut. Their business is to own the money supply that will facilitate its own economy. You run your own economy through a business.
Sure.
So these concepts aren't new of digital wallets and things. However, wallet providers that allow people to onboard, offboard, get into fiat and get out without major fees and those are going to be the real products that people will need to start to use to interact with this ecosystem. Specifically with the rise of DeFi, decentralized finance allows people to rent assets, lend assets, borrow assets, all these different kind of things. And there's a lot of solutions out there that are doing that. And I think that anything that allows seamless integration with those plays is a fairly safe bet. I can't name specific projects, but they're not. I mean, I'd probably say if you're looking at DeFi, DAOs, and wallets, I mean, you'll probably see what projects will rise to the top and what won't.
Yeah, definitely super interesting space, and we should definitely go more in depth on that on another occasion. But
Yes.
yeah, I mean, this week actually alone, I was on a call and I was discussing basically the potential of DeFi and how it's evolving so quickly. And like you're seeing a lot of stuff actually that's maybe not 100% necessary. Like, have you seen token sets like where people try and look for like financial pairs? So people are trying to pair up like ways to improve like yields basically of like crypto asset investments. And you can basically pair it up so that it divests or invests into certain pairs based on your own inputs and thresholds. So that's interesting, but I don't know how important it is right now. But more important, like I'm seeing things like you're saying, like loans, savings, where you can actually see full ownership. I think that's going to be super interesting. Like virtual assets are kind of taking off, and I don't know if you saw, there was an announcement with Minecraft and Engine Wallet, and basically their aim is that in Minecraft, one of the largest game platforms out there, they're actually allowing you to own your assets within the game now, and to be able to trade those assets outside of the game. And that's going to be huge.
Yeah.
And I really, honestly, I feel like blockchain-based gaming, or just call it gaming with blockchain integrated into that, is going to be absolutely huge, because it just enables so much. Right? I've also seen like people stake their virtual assets in return for loans. So they use it as collateral for taking out loans, so that their crypto assets are not tied into that asset over a very long time. They get back a portion of it. They leave the asset with someone and say, okay, what do you think this is worth? Okay, give me a portion of this. I'm now going to invest it into something else. And I think that's going to be very interesting too.
But I think also making that process seamless is the important part, because if it's only usable by 0.1% of the population, then it's whatever. It needs to be seamless across everything. Which is always going to be the challenge. The UI is going to have to be huge, but that's not mean it's new, as in it exists, but it's not, hasn't. I mean, Engine's been around for a while, but I mean, yeah, it's true. I mean, there's so many different places that this can go, and especially as we move more towards a casual work economy, like the way that DAOs currently work, where you apply to do a project for a DAO and they have a certain amount of money set aside, and you tell them how much you want and what you want out of it and what you're going to do, and then the community itself, says yes, no, maybe, and then if you then complete the contract, then the DAO automatically pays you. Doing things like that is going to be a lot easier, so it's less like a less like a Fiverr or something like that. But you essentially put work out if you own it down, I want this to be done, and then essentially you don't even have to follow it. Just at the end of the day, you get a result, and then that's it. So it will work in some cases and not in others. Creative industries probably not, but in other things, yes. But I think it's interesting to see how this is going to start, and if you can see how it's going to play out, and then everything in the difference is the opportunity. And that's more going to be the challenge for people, because obviously it's still a niche industry where there's a lot of technical things that need to be learned for people to be successful in this space, especially if you want to make a real impact. And I think that's sort of that's where most people are going to struggle. Yeah,
definitely agree with that. And on that note, we're coming up to the hour mark. So
happy days. Mate, I told you you didn't have to worry about time. I told you.
So that we thank everyone for tuning in again on a Saturday evening. Thanks for sparing an hour of your time. And if you guys are interested to learn more about cryptocurrency, crypto assets, blockchain, about the technology, drop us a line. We'll drop our social links into the comments so you guys can find us. But just a quick one anyway. Luke, why don't you share your means of contact?
You've got the channel, man. Just look for Blocksiders. That's the easiest way to get me now.
Okay, so look for Luke on Blocksiders. Look for us on BlockchainSpace. Thank you very much for tuning in, and have a very good weekend.
See you guys.
Thanks, Luke.